You may have seen floating around social media recently tons of posts claiming that the IRS collected a record $4.9 trillion in taxes this year. Well, not only is this not true, but the reality is actually worse. And so we're going to take a look at what actually took place with the IRS and tax collection for 2023. Number two, we're going to take a look at what the result of this is, what they have to do to make up for a shortfall. And then number three, obviously we're going to take a look at what this means for the markets, because this will, or at least it should, have an impact. So you may have seen posts like this saying that the IRS raked in a record $4.9 trillion in taxes last fiscal year. And the reason why I think this is right now circulating around social media is because of this post that I found from the Journal of Accountancy. It was published recently on January 4th of 2024. And most people are mistaking this because they show that the IRS collected $4.9 trillion in total taxes, but it's for fiscal year 2022. So I think most people are just not thinking with the year change going to 2024. They see 2022 and think last year. No, this is actually 2 years ago. As we can see from the Federal Reserve's website, the $4.9 trillion number came in 2022. So what actually happened for 2023? Well, the reality is tax revenue actually fell. If we go to the federal government's website, fiscaldata.treasury.gov, we click on revenue and we can see the current year-to-date figures, which shows that the government has collected $678 billion in taxes just in this fiscal year to date, which is up 19% from the same couple of month period last year. But what we really want to know about is what took place during the entire fiscal year of 2023. And here we can see that tax revenue from 2022 to 2023 actually declined. In 2023, they collected a total $4.44 trillion in tax year 2023, which was down from the 4.9 they collected in 2022. So last year, the federal government took less in taxes than they did in 2022. Now, if you're anything like me, your initial reaction is, yes, I can't stand how much money Uncle Sam takes from people every single year. It's the most patriotic thing you can do to pay as little as possible in taxes, because if you believe that the government has your best interest at heart, you want to follow the rules that they've given you by taking advantage of all the deductions and credits that they give you, because they say that those will make the country a better place. So if you love your country, it's the most patriotic thing you can do to pay as little as money as possible in taxes. So when you see that the government takes less in taxes, you think that's a great thing. Well, I'm going to show you why. It's actually usually associated with severe economic pain. Back on the Federal Reserve's website, we see total federal tax receipts. This is the revenue that the government takes in taxes every year. And we can see that the majority of the time, this line just goes up, which means that every year, usually the government takes less in taxes than they did the year before. But let's zoom in here to the very beginning of this data collection, 1981. We can see that tax revenue declined to 1982. And this gray bar indicates that that decline preceded and happened then into a recession. Moving forward a bit into time, we can see that tax revenue really took off in the late 80s and then stagnated from 1990 to 1991, barely increasing. Again, right into a recession. Going forward a little bit farther into the future, we see the years 2000 to 2001, tax revenues declined, and then again into 2002, again, tax revenues declining into a recession. Fast forwarding into the future a bit farther, we see tax revenues peaked again in 2007, declining into 2008, declining again into 2009, resulting in yet again another recession. Tax revenues really picked up again and then peaked in 2019. Tax revenues declining again into 2020, resulting in yet again another recession. Which means since 1980, for the last 40 years, every single time tax revenues have declined, we have seen a recession every time. And yes, this recession in 1991 happened without a decline in tax revenue, but it did happen with a stagnating for 1 year of tax revenue. But it still stands. Every time tax revenue declines, a recession has happened since 1980. That is 4 decades. And yet again, from 2022 to 2023, we see another year in which tax revenues declined. Unless a correlation that has happened 100% of the time for 40 years now happens to be wrong. We are going to get a recession in 2024. Now, this isn't causation. It's not that the drop in tax revenue causes the recession. It's likely the opposite, or there's a third factor that causes tax revenues to drop that also results in a recession. That makes sense. People have less money, people spend less, people deleverage, people save more, people lose their jobs. Those things result in tax revenues dropping. Those things also result in recessions. So while I'm happy that the government gets to take less money in taxes, or they did in 2023, it will almost certainly result in a 2024 recession. To make up the difference, we see something called the national deficit. If you spend more than your income, you have to use debt to cover your expenses. And the exact same thing is true of the federal government. If they spend more than they take in taxes, they have to use debt to cover the difference. The amount that they borrow every year is called the deficit. Year to date, they have borrowed 13% more compared to last year during the same period, which means that going into 2024, as tax revenues continue to fall from the continued economic pain and recession, they're going to have to borrow even more than that to make up the larger difference, because the last thing they're going to do is reduce spending to cover the difference. We've seen a brief few-month period in which interest rates on government debt have been falling, but that is likely over now as a result of the increased borrowing is going to start outpacing the demand for lending to the government yet again. As that deficit widens, as the country hits a recession, they're going to have to borrow more and more. There's going to be less money available to lend to them. That's going to push interest rates higher up some more. This fits with my longer term thesis I've been talking about for over a year on this channel now. We are in a long-term cycle that lasts about 40 years. From about 1940 through 1980 was 40 years where interest rates and inflation were both moving higher. For the next 40 years, from about 1980 until 2020, interest rates and inflation were both moving lower. But they bottom out when interest rates hit 0% in 2020, and we are in for another at least decade, but probably multi-decade phase of the cycle where both interest rates and inflation are moving higher yet again. And there absolutely will be, as there always are, periods of time where you have a reversal from the trend, where interest rates go down for a short period of time, but the longer trend is higher for longer. And if you've recently jumped on the bandwagon that bonds are a buy right now, just understand that you are in one of the most crowded trades, because right now, according to Bianco Research, we are seeing the most bullish sentiment on bonds since 2020, which historically was not a great time to be bullish bonds, as they started dropping rapidly after that. Now, as you and I both know, when they get to a point where interest rates are a little bit too high for comfort, the Federal Reserve will step in and save the day and start printing to make up for that gap. This will likely result in a return to quantitative easing, where their balance sheet starts to increase yet again as they buy up more government bonds. But even though that will result in lower interest rates for the government, that will likely result in higher interest rates for everybody else. This is because the government spending at that point will be done through money printing. That will mean more money in circulation. That will have the impact of pushing higher on inflation. And as inflation moves higher yet again, that means the only people who are going to be lending below inflation are the Federal Reserve. And people like you and I cannot access lending from the Federal Reserve. People like you and I have to access lending from people who actually care about profits, which means they won't be lending at a real negative rate. They'll be lending at a rate that's above the inflation rate. And when inflation moves higher, so do interest rates. But for those of us who are paying attention, this is actually very good news, because number one, recession means there are going to be deals that create fortunes over the long term. And number two, inflation is a fantastic way to build wealth over the long term if you understand how to use debt. If you need help putting all those pieces together, I highly encourage you to join Heresy Financial University and join hundreds of other members who are learning how to make massive profits and protect themselves from losses, despite all the craziness going on in markets today. There are a few slots left of the discount code New Year New Me to get 50% off. By the time you watch it, there are probably just a couple of left, so go ahead and try that code out. Code New Year New Me to get half off. Thanks so much for watching. Have a great day.